Hi, Larry Gaines, PowerCycleTrading.com. I wanted to do a follow-up video on one that I did last week. So if you'd like to go back and check it out, it was last week and it's on my YouTube channel. But we set up on Thursday, we set up a long trade on gold, so the 13th of May. So basically, you know, what we're looking at is momentum had turned up, and then we were looking at this, you know, touching into the 618 retracement here from that prior major swing high back in January 6th to the low. So we went through the 50, we consolidated for a few days, then we started pushing through the 618, and this descending trend line here started looking to potentially break out above that. Today we got the breakout, so it's looking really good for gold for further continuation up. So let me show you the long-term chart, and then the way that we traded this long was using GLD, the gold ETF, and we did a really nice trade setup called a calendar diagonal, where if it did churn sideways, took a little bit more time for it to finally break, we get paid while we wait. So let's take a review of that trade, and I'll show you what it looks like currently. So here's an overview using the long-term weekly chart. Here's gold, here's the descending trend line. See it breaking today back above that 50 simple moving average. So this is a big major breakout point. So it could hold here, consolidate, but anyway, this has good potential now. Next target up to about 1895, and then potentially back to that prior high. So the way, again, we did this was with GLD, and here's what that looks like. So last week on the 13th, we basically went long GLD here, trading at 170. It was trading right here, 170. And today you can see where it went out hitting that 175 area. So I think there's more potential upside. We're looking to a movement, next target being 177. And then here's the longer term chart. You can see there's good potential to follow through to the upside. So here's GLG on the weekly long term. Again, you know, just like gold, it's back above this 50 simple moving average, going through the 618 retracement, broke through a trend line right here. So our next target is going to be, you know, towards 177, then 178, that area. So what we did to trade this, we did a calendar diagonal. So with this trade set up on the 13th, that was last Thursday, we went out and we went to the July 16 series. So plenty of time in the trade to work the long dated, bought the 170 call and sold against it this week, the 21. So that's Friday's expiration, the 174. Did that for a spread of $3.95, so $395. Now today you can see where it went out right here, and that was up. It was up going out at $138. So currently up about 35%. But the other thing that we did, we rolled it because you can see it's into the short strike here. So we closed out the short strike, which you know, increased our cost to the upside. But then we sold. This is what we did on the adjustment. We still are long the 16 July 170, but then with the adjusted cost here going up, and then we sold the 177 further out of the money, but the same series. So we have potentially to make more because of, you know, the spread up here to 177. So basically this went out up 173, and if we get a move towards the target here, 177 by this Friday, if it's trading up there, this will be up over $360. And if it's not, then we'll close out the 177, take the profit there, and then roll this to the next week. So anyway, it's a great strategy because we can kind of amortize it as we go, kind of like a covered call. And if it doesn't hit our targets, but we still think that it's going to move higher, we can still play this like a covered call, close the short dated, take the profit there, amortize down the long dated, and then reset the short strike, you know, rolling it to the next series and, you know, using either the same strike or higher. So if you'd like to learn more about these types of option strategies, make sure to follow us at PowerCycleTrading.com. Good luck trading.